Can you hear me now? I just said what's up. How's everybody doing? It's been a while. Move something over here. Can you guys hear me nice and clearly? How's the background audio? Cool. Just give me a quick sound check, and then we'll get started. Do a little banter in the beginning, and then we'll look at some charts. Sound is good. Good. Just want to make sure the background is still playing, but not annoying. All right, guys, what's going on? Say hi to everybody. I haven't been on a stream in I think like a week now. Everything in my house is pretty much done though. So I had contractors in my house for the last month and a half doing a bunch of renovation work. All the contractors actually guys from Ukraine, great group of guys. But they're working in my house every single day from, they would say like we'll be there at 8:39, and then like the first guy would show up at like 7:30, and I'm up by then anyway. But just from 7:30, 8 o'clock in the morning till 4 o'clock, 5 o'clock in the afternoon every single day, and it was just constant background noise, and it was distracting. I wasn't really upset, but there was really I haven't had like the urge to, do much. It's just like nail guns in the back of my head all day. All right, so yeah, I did I trimmed the beard. Yeah. All right, how's everybody doing? So real quick, just to get the formalities out of the way, none of what I say is financial advice. This is strictly for entertainment purposes only. The funny thing is, I was actually on YouTube like a week ago listening to something about YouTubers and financial advice. And the truth is, actually, if you're talking about commodities, you can actually say whatever you want. So I said like a week or two ago, I threw some shade at one of these Bitcoin maxis who said something very sailorish, like take out another mortgage or a loan or something and buy more Bitcoin. And I thought that was really negligent because he had like 300,000 followers. It turns out he could not get in trouble for that. If you're on social media, if you're on YouTube, you're not speaking to anyone specifically. You're speaking to a broad audience, so it's not like tailored specific financial advice. And Bitcoin does fall under the realm of commodities. So I had a problem with what he said, but technically he couldn't get in any trouble. But anyway, none of what I say is financial advice. The truth is actually even advertising that, so this is not financial advice, right? Trading is extremely risky. You can and likely lose all your money. That's not good enough on its own either way. If you were to break all the other rules that are involved that we don't break, that wouldn't cover your ass, right? Either way, I think you guys get the idea. I'm just providing, my opinion, some market color, going over how I trade, and that's that. And we have a little fun. We banter a little bit. We get off subject. We shoot the shit, so to speak. And yeah. So anyway, thanks for coming on. For those of you that are new, please make sure you hit the like button and subscribe. Josh and I, so my partner and my co-founder of Blockroots, Josh Rager, we've been working on something for the last couple months, but in the last month we've really gotten the wheels turning with a project that we're working on in the background, and we should release that in the next, I want to be optimistic and say month and a half. And then Josh is going to be doing a lot more videos, and I'm going to be again live streaming every single week. Week and a half ago, I guess a week ago, when I last streamed, the week before that I streamed, I think 5 days that week, and I intend on streaming at least 4 days a week. and I promise I will keep my word. So, thank you for tuning in. If you're not subscribed, you are, probably having trouble communicating in the chat, because I made it so that unless you're a subscriber, you are unable to participate. Today, I am drinking green tea. I think it's matcha green tea, and it's in a Captain America, workout jug. These either get lost, I leave them in like the trunk of cars, and then I don't want to use them again because they smell like shit. But the trick is to actually put this in the freezer after I use it, because apparently that kills bacteria. Obviously, you have to clean it too. But anyway, so yeah, thanks for tuning in. Let me just say hi to everybody. If you're interested in any of the platforms I use, our partners, Phemex, use Phemex.trade. That link will get you access to any of their current promotions that they're running. They offer perps and spot. You can KYC. You don't have to KYC, right? If you don't KYC, your limit is somewhere along the lines of 2 BTC a day to withdraw. If you do KYC, you have reduced fees, and also right now you have, for 1 week, 100% APY on any stables deposited. So it's an incentive program they're running to build up KYC. I think we see where the market is going in the general direction. I think when the market is a lot more locked down, it will be actually after it has kind of opened up more to some countries and citizens that are currently finding trouble accessing, because their regulatory bodies don't have exactly don't have the situation as they would wish. And I'm speaking specifically, obviously, with regards to the United States. But that's the way everything's going. But right now, there obviously are still many exchanges that they don't require you to KYC. So those links are below. All right. Say hi to everybody. So first question. So I'm going to answer this question, then I'm going to get into a couple trades that I took in the last 24 hours. I had a really good trading day. I said it this morning. I said it was my best trading day of the year. That was actually false. I thought that, and then completely left out two pretty significant shorts that I ended up capturing, but not for nothing. It was a day that really stuck out. All right. So I'm going to go over your footprint question. Okay, what's going on, guys? Everybody. Powell sucks. There's the banter. So 25 basis points. So listen, I think this is the first time that no, you don't lose access to leverage trading if you don't KYC. So I think this is the first time that Powell actually spilled the beans before we actually had a meeting. So I don't think there's been any other time in history where he basically conceded to the fact that 25 basis points is what we're getting in March. So I don't think that there's going to be any surprises. I think that you've seen the markets respond very positively to that. I think that legacy markets are kind of showing the way right now. So the 50 basis point rate hike in March is off the table. There was a lot of conversations coming up recently with what's happening in Russia and Ukraine, and for anyone who is experiencing hardship because of either side right now, my thoughts go out to you. And it doesn't mean that you just have to be from Ukraine. There's plenty of people in Russia that are, they didn't ask for this, right? No one wins in war, right? No one wins. Both sides suffer tremendous losses. So, the conversation that came up recently was, and I saw a lot of people jumping to this conclusion, they're not going to hike at all. That would just be absolutely ridiculous that they wouldn't hike at all. And then I saw some talk about, QE increasing. So they're going along as planned, but I think it's not going to be as accelerated or as abrupt as maybe what the market was anticipating for the last couple of months. And, this has been front and center. Markets have been very shaky, very thin. Liquidity providers have been, hard to find in the order book. So I think what we'll see is maybe this will smooth things out. In the last 2 days, we've had some of the biggest bond moves in history. So I think markets right now can take a breather, right? So that's good for crypto. So I think that kind of covers what I want to go over with regard to the macro. I don't want to focus too much on the macro. The macro has been so tiring lately because it is front and center. You can't say like I don't want to focus on it at all, because it is right now, it is leading. But I think you can still, Bitcoin has been very correlated to the ES for the last 2 months, right? It's obviously broken considerably for the last 3 days. But I think you're still better off just if you're a Bitcoin trader, not like confusing yourself by looking at a chart of Bitcoin and then constantly looking at a chart of the S&P or the ES. You're going to see the same, I guess, types of behavior in the crypto market expressed through BTC as you're seeing in the S&P or the ES. The same opportunities sort of set up, same ideas behind the opportunities. So don't distract yourself by trying to keep track of everything right now, especially if you're not someone who's been doing this for quite some time. It could be quite overwhelming, right? And like I said, and I'm going to get into everything in a second, just to reiterate this, markets have been difficult for everybody that I know in the last 2 months, myself included. I had a great, I think my January was great. Had a good February, but good is not great, right? It was not nearly as fun as it's been in the past, but markets don't always stay that way, right? So this has been a very difficult period for a lot of professional traders that I know, a lot of career traders I know, a lot of institutional traders. It hasn't been a walk in the park, right? So for most people, it's better to just kind of step out, and if you're not going to step out, to absolutely adapt and size down, right? Take less risk. Only go for your A+ setups. The first thing that people are going to anchor on is higher time frame retests, major levels, support and resistance zones. Taking what you can get, right? Small bites. I think the saying is eat like a bird or eat like a mouse and shit like an elephant. I shared that maybe last week or the week prior. Well-known FinTwit trader, TradFi trader, futures guy, James Jude shared that. The idea is, take the small wins you can get and get the fuck out, when things begin to turn south. I didn't mean to put that much emphasis on the F-bomb, and I know I drop it often, but I didn't even expect that. So, all right, so really quick, I'm going to switch it over just to cover this concept. Aaron is, hold on one second. All right, let me just do something really quickly. I just doxed him, but I think everyone knows, most people know. I didn't dox him, but he's going to have a laugh because he doxed me accidentally recently too, although he fixed that. All right, so I just had to tell him I was joking about something. Let me just switch the screen. All right, okay, cool. All right, so one of your questions was on the footprint chart, zero sell or buy on the top of the rotation, please cover. Okay, so let's just find, this is a 15-minute footprint. Here's a zero print right here. I like to look at it on, I'm just making sure the chart's lined up. This is a trading based chart. So trades based rotation. So this is set to 987. So these candles are only going to pop up when there's actual underlying activity. So not just through the passage of time. So here is a zero print or a completed auction at the high. So it's a zero print at the bid. What this means is that as price came up, as price auctioned higher, this never went bid, right? So the bid was no longer willing to follow price up from, let's say, and this is set to a higher tick, this is set to a 40 tick, but let's say, between I'll change the tick so we could actually get a little bit more granular view. Okay, so let's say from 44,305 up to 44,315, the book never followed up, right? Price never went bid. So as price rose, price was unable to consistently find new buyers, right? And instead it walked into sellers. Or it still continuously had willing sellers, willing passive sellers. So you'll see that this is usually marking the extreme, or you'll see these at the extreme or the end of a of an auction at a range high. It's not on its own like the smoking gun for where the the perfect Pico top or the opposite Pico low would be, because you could have what you want to see is ultimately a bunch of these line up. So you'll have a bunch of cases where and this is why I like to look at a lower time frame chart. Not a lower time, it could be a low time frame chart, but like a non-time based periodicity, like a tick chart or a volume chart, so that I see multiple rotations. But if you're looking at, just imagine that this is your range high, this is your range low, right? Imagine that this is, again, just the concept of a two-way auction, right? So as we're raising the price of something, right, buyers are bidding this up, okay? The end or the high of the auction, or the high when price gets too far away from fair value, what do you see that takes place in an auction, right? Just a normal auction where a bunch of people are buying cattle or buying horses or buying a car, whatever, in art auction. As price rises up, what does it ultimately do? The volume in the room begins to drop off. So again, bringing sort of the comparison between the volume of people in an auction house and the volume in the market. So the interest kind of dries up at a certain point when price gets far enough away from fair value. You no longer see buyers willing to bid it up, right? Willing to passively step in the way up here and to buy with, for example, with a limit order. So this is market makers, algos, your discretionary participants no longer willing to provide liquidity as we get towards a high. So it's good when you find confluence between this and, like, let's say a range high or a supply zone, because it's just proof, right? Or it's just a little bit more proof that no longer buyers are willing to bid this up. So what price ends up doing is going down to find new buyers, right? And this is just the concept of a two-way auction. The zero prints at a low are the opposite, right? So if you have a footprint comes down here, breaks a low, and you have zero prints down here, well, that means that the offer or the ask no longer tracked price. So what you might have happen is aggressive sellers were willing to sell, all right? The bid is maintaining, but you might have a gap where there's an actual spread between the actual bid offer at that point and the ask or the offer was no longer willing to passively sell that down. The concept is, the heavier hand, the smarter participants, the participants that shape market structure are going to be operating within the limit order book, whether they're actual directional entities or market makers. But the idea is, again, you're finding the end of that auction, right? You found the point at the low where sellers are no longer willing to passively sell something down, right? To provide liquidity at a low point. It's not on its own. Like, you can't just see one and say, like, oh, that marks the high or that marks the low. What's good is when you obviously have, a range of prices. Again, this is good for scalping. You could see this over a range on the higher time frame, where maybe there's just less interest overall, there's less volume, there's less willingness to provide liquidity towards those highs. There might be, a bunch of zeros towards the highs on the bid, but it's not necessarily likely the case that you're going to have it perfect where, no one's willing to just provide a bid, because you will have volume in the bid just through market makers that will continuously step up either way. So that's just the concept of sort of finding buyers and finding sellers. It goes back to just concepts within auction market theory, right? What was I going to say? I was going to add something else to that. It's good to think about it like a two-way auction, right? Buyers willing to bid up. You at some point you lose them, right? At some point you lose their interest, and again, it's when you get away from fair value. This is all very in line with some of the core principles behind market profile, right? One other thing I wanted to point out is you will have points where you will have like a bunch of zeros at the high or at the low. This is usually when you have price like burp. Sorry, I just had some almost like a popcorn kernel. So like through a high or through a low. So for example, let's say this is your candle at the high. You might have a bunch of zeros towards the end. It's actually a pretty good sign. You have a bunch of zeros, you have a bunch of volume up here. This is usually a little bit more actionable, because what this usually is a stop run, right? So you might have like an area of confluence, or let's say a major swing high, prior swing high up here. Price takes out that level. there was no passive buying up here. All of this volume that just came through, you saw spreads blow out, and really what that was is all these stop losses and breakout orders triggered. And that's usually pretty good for a short-term rotation back down towards the origin of the move. Now, the origin of the move might mean a couple different things, right? Whether or not this is on the high time frame, whether or not you're looking at this on like a tick chart. But just the idea of it is relatively the same in that's usually just a probe or a stop run. And that will usually have multiple zeros. And it's just like a gap in the book, right? You see that within candle structure when you have short covering, long liquidations, when you have stop runs, when you have a bunch of those zeros together. It's just areas that never really, there was really nothing transacted, right? All right, so let's get to the meat of it. Real quick, if you look at the S&P right now, I know a lot of people are sharing this chart. Yeah, that's a great looking chart on the weekly now, right? There are, I think that after today, I don't think anyone expected that Powell was going to sort of, leak alpha, and I think you could guarantee that now you're definitely not getting anything over 25 basis points in March, right? Before that, I would still be, I would just be weary because the kind of behavior we had seen in the S&P recently, and again, we're in sort of a news-driven wartime environment, is indicative of like a market that's not very thick, not very healthy. After today, I think it's a completely different story, right? I think that we're going to see relief in the coming weeks. I don't really anticipate much further downside. Maybe we have a little bit more ranging, but I would say that this 4100 and below region is I do not see us trading below that region in the near future, coming weeks or even in the coming month. So BTC real quick. So Bitcoin is right into higher time frame resistance, right? So this is the, I think, logical area where you would expect price to be capped off, right? It had been, in the past, very strong support. The first returns back to this level. As you can imagine, we're going to be running into a lot of supply because the market had been pretty vocal at this point about this being a potential bottom, right? So chances are, when you have bottom talk, it's not necessarily just people that are talking about short-term futures positions. You have people that are, looking to get back involved with major spot allocations, get out of stables and whatnot. So for a lot of people, you would assume that when this broke down, they kind of just still hung on and rode those positions out underwater. And just from a psychology standpoint, it's likely that when someone gets back to the point of their entry, they're going to cover and reevaluate. So you could anticipate that this long liquidation structure would lead to resistance on the return, right? So now you have a couple things, right? This was sort of a head and shoulders meme, and then you had a head and shoulders meme here. This return back now, I think, makes this level. This shows that this level is of utmost importance, right? If we were to break above 45, so I think a clean break above 45 is not really debatable in terms of what it means. Just to clarify, 45K, acceptance above 45K, so that probably looks like something that pokes up, beyond 60. If we rotate, let's say that we rotate a little lower now, and then we break above 46, right? Did I say 60? That sounded funny. If we consolidate underneath this resistance right now, right, and then we smash up through 46, I don't think you're going to get a big high time frame retest at this level. I think that usually happens after a long period of time. Good examples back here. What you usually get is a lower time frame retest, so something that's intraday, something that does not look like for many people, like they necessarily would want to buy it, right? There's a little bit of disbelief. Oh, we need like a daily retest that involves a couple days rotation back down. Chances are when you break through a level that's this obvious, a lot of the market's going to get behind the move. The pullback would probably happen on the low time frames, and what that usually leads to is a pretty one-way trip up, right? You might get the first pullback around mid-range, consolidates here, and then we end up getting to 52 in relatively short amount of time. And then, you pull back, over a period of time, you finally come and retest this 45 level, and then you start, you have to start really thinking, has the trend changed, right? Has the trend changed in the sense that this is leading to this, or has the trend changed locally and that we're looking at maybe just a potential lower high? So you don't, you never get, the market doesn't give you that much certainty. I think that the certainty is really honestly around this 45 region right now. So, this is not just a technical thing right now. I think that Bitcoin it's in the last week, so much has happened. I think it's both positive and negative for Bitcoin, right? And most of my focus is on Bitcoin. If you just look at all BTC pairs right now, besides like a little bit of strength in the last 48 hours, obvious idiosyncratic strength with things like Luna, this is a Bitcoin market right now. Bitcoin is being used right now by Ukrainians, by Russians, potentially get around some of the troubles that they've been caused because of of what is taking place geopolitically. I don't think Russia is going to be circumventing or getting around sanctions through Bitcoin. It's just with the amount of money that they would be looking to move around or would need to, Bitcoin would not necessarily be the best place to do it. Just because entering the market with that amount of capital would change the market. It would not offer stability for what is probably money that, capital that needs to remain stable. So I don't think that that's an issue that we have to worry about. The narrative of that obviously is, that can be spun in a negative light, right? But I think that this is clearly showing that it is a life raft right now. And I think we're seeing partially a crypto native bid, but a lot of this is exogenous. And I think that you could expect that there's going to be a lot more institutional interest and just larger participant interest in general because of how Bitcoin is behaving in this time. That's as much as I want to get into that because I'm sure everyone is tired of that by now. So just to go over something really quickly, and then we'll look at the TPO chart. I was talking about this resistance back here, right? This resistance, so this prior support, or this what was anticipated might be resistance, I said something along the lines of, this, clearly was a level that price would cut through very quickly, and to use new levels, right? So to favor recency. As long as a level is still doing its job, it makes sense to still show it respect. So this level prior, so if we just put on, we'll just highlight the general region. Sorry about that. I wanted to use the box, but I want to spread it out. 1 sec. Extend to the left. So yes, this level in the past was significant, right? So prior range lows back here. Price breaks down, again, significant here. All right, supply zone, support zone. But that changed recently, right? Right here. Really no development besides in a low time frame in that region. So you could see that, I didn't mean to move that, so just get that back. You could see that there was really no time spent whatsoever there besides 2 hours as support for something that held more previously or in the more recent retest for a matter of over a week, right? So this level did its job and then no longer did its job, and it was within eyesight, right? So these highs make sense to expect a kickback, right? To expect some type of liquidity probe, to expect a possible reaction. It still makes sense to have this label or level labeled. But it does not make sense to blindly step in front of it or to just blindly sell it, right? Just because there's really no development right here, right? So I put out a checklist a really long time ago, and there's like 25 questions. By no means is it unique. There's questions that you've heard of before. We talk about gaps, we talk about thin areas, thick areas, areas where you would expect stickiness, friction, yada, yada, yada. These are by definition areas where you would say, hey, is price likely to speed up or slow down through this region, right? So This was the more local high time frame resistance that clearly was acting like resistance. We cut through it with this move right here. Right? You have a series of lower highs, not a whole lot standing in the way once you're above this region. Right? So once you're above that like 40K handle, short time frame trades, scalps, I take those all the time. But once you're above all that and you're into a region that, yeah, it was support in the past, like it's a matter of, the question is like, how far back are you going to go to define a level? If it more recently didn't do anything, and what it implies by not doing anything, it didn't even spend any time there, and there was no development, it's not a substantial structure, right? So the chances are that any kind of acceptance within this region, now this prior region was technically a value area of a trend day. It was spread out, right? So a trend day has really no development whatsoever. You might get brief pullbacks that develop, low time frame consolidations within the structure, but there's no real development at all. So on the way down, a trend day on the low time frames for this is just going to be what? A series of lower highs and lower lows. So no development whatsoever. The moment you accept back in there, chances are you're just looking at the next high time frame structure, right? So the point was probing above these highs and maintaining those levels. As soon as price begins to push, it's just a matter of just get out of the way, right? Because the chances are it's going to cover this region. It's going to cover that gap very quickly. And I don't want to call it a gap because, again, price spent some time there, but there wasn't really a whole lot of two-way trade. It was a pretty high conviction move to the downside, very one-sided. No fair value, no balance really established at all. So if you're looking for an area to act as either a supply zone or a demand zone or support or resistance, just look at how you would assume a structure to be significant in real life, right? Whether or not it had a strong constitution or not, you would say it was, if it was large, if it was built out over a wide span, you would say that that's probably a little bit stronger than something that was built vertically. And I think I'm taking this analogy or metaphor. I don't even think I was descriptive enough to call it an analogy or metaphor. The analogy, right? I think you get the point though, right? There was nothing really stepping in the way. Anything that was support in the past or deemed to be a significant level in the past, it had been done away with this move. So I think it's really important to focus on what's recently happened. So the same thing can be said for this structure we built here, right? If this is a strong trend move, and we're going to go to a TPO now instead. So either way, 45K above here. If we're trading at 46, especially after all of this back and forth we've had, I would just, I know me personally, I'll probably look for swing long positions that I don't anticipate are going to offer us like the perfect technical retest, because that usually never happens. If you got something where you broke up from here and then we're back down at this region, I would be more suspect of it than me getting involved if we were sitting above 46 and it looks a little bit tougher to define, right? Just because it looks like, hey, we didn't get a retest yet. So let's change real quick to today's profile. All right, so obviously multiple periods of balance, not necessarily balance on a day-to-day, but that entire region, a very strong break from that region. Short covering obviously as well, but this is a really strong move. By all means, this is a strong move. I had mentioned from this low that this was an aberration and I would not FOMO. And that was just me writing at the top of this wick, I would not FOMO. And sure enough, we got to pull back into the single prints where you would expect price to pull back. So to fill out this lower volume node, price did offer you a better, a better entry. I had been bullish leading up to this either way. But this big break right here has left behind a pretty large gap. So if you were going to get a pullback from here, this would be the first area that I would look to act as to identify whether or not there is a significant response still by buyers, right? So you have a single print gap from like 42.7 all the way down to 42. Just an area that was not very accommodative of price in the past. You have the anchored VWAP from the lows, so where all of the risk averages out for the last 3 days. I would anticipate that if we were to explore this region, we would probably see a significant response, at least the first go around, right? So that implies that this is to continue as a trend, right? So if price comes back down, usually the single prints of a trend day should act as support. But going back to the idea of recency and a structure being significant, a trend day is very elongated, right? Has brief periods of balance, consolidations. Before that, larger participant, imposes himself or imposes their will. I don't want to say it like it's one person, but this is just a high conviction move, right? Very one-sided move. It doesn't leave much. It leaves a lot to be desired for in terms of market structure, right? So you would want to see that this region, that we don't explore any more than I would say this 42 region, right? So, a snapback would probably come before 42. If you trade below 42, just going back to the structure we talked about piercing through on the way up, there's really not a whole lot to go off of until you get to, until you get all the way down to 40, where you have some kind of development over the period of, again, 4 or 5 days, right? And that, more than 4 or 5 days. So there's a lot of longs that have come in above 42. So whether you're looking at, and just to clarify something, as an order flow trader in crypto, there's a lot to pay attention to. You have to pay attention to the leading exchanges. So lower time frames, I look at the exchange I trade on. So for perps, but I always focus on Binance and FTX as well because they lead by open interest and volume. I said BitMEX order flow is very clean. The thing about BitMEX being clean is actually BitMEX just follows Binance. So if you look at BitMEX order flow, if you look at something like BitMEX CVD, low time frame wise, it's pretty much the same. From a positioning standpoint, it's pretty much the same as well. So when you see a lot of activity come in on Binance, it's almost like it's one for one on BitMEX as well. And I think that it usually follows price pretty well. Bybit is where you find, I think, a lot of really clean divergences, a lot of stupid trading behavior. So Binance in particular, saw a pretty significant pickup in aggressive long activity towards these highs. Now you just have a lot of two-way activity, period. So there's a lot of new shorts that have come in, a lot of sellers that have come in recently. But the idea is, regardless, there's a lot of risk tagged on above, on the top of this consolidation. So not a very strong structure. A lot has come in since. Again, this 42 region, I think, has to give you your response, because just the chances are that it doesn't have to mean that this changes the higher time frame trend. The chances are very high, though, if you trade below. And again, VWAP, anchor VWAP is a good thing to pay attention to. Odds are, if you trade below 42, you're trading below a lot of risk, right? A lot of new risk. So whether it's the new passive buyers, which a lot of them are going to be market makers that stepped in the way of that aggressive selling on Binance, and whether or not it's the aggressive buyers that came in a little late towards the top of the structure. So chances are, if that happens, right, what do? You probably get one of those cascading moves down to wipe out some lows, and then maybe see price stabilize from there. Wouldn't be a good thing either way, right? So point being, 42 is the lowest that I would want to see price go. It is where I would say, if we came down to, would be kind of par for the course, though. All right. So trading the last day and a half. So I took a lot of trades the last day and a half, and then I'm gonna look at the chat in a second. I took a lot of trades in the last day and a half, but 3 really stood out. So really quickly, I'm gonna go over those. So the first trade was a Dalton setup, which I actually got in and out of. So first time around, and this is just a reminder that you might have a setup that you swing at a handful of times. If the setup continuously presents itself, I don't see a reason why you shouldn't continuously swing at it. This is where sizing comes into play. This is where making sure that you're not overextending yourself on the first go around, so that you can afford to do this, right? So the first Dalton setup. So mind you, just some context, we're into the first region that you would expect to be a real higher time frame support and resistance, and or one that would be actionable, in this case being resistance because it's a demand zone. Very cleanly defined. So this 45K region, very strong move up. You know, after a trend day, you're going to see, again, usually 2 to 3 days balance form. And, you know, we have the first day, very balanced, right? Here's your trend day. You basically just kind of group those two together. So here's your trend day. Sorry, my drawing tool's a little wonky. Trend day, first balance day. I'm not anticipating really ever that a move like this leads to immediate continuation. So where you have, you know, a strong trend day into resistance, right? After we've already had some significant moves off of the lows, that just breaks on through and only leaves 1 day of balance. Maybe if there was like, you know, much larger increase, you know, much larger amount of open interest, and we had maybe some other kind of macro driver or catalyst. Maybe if this occurred, you know, for example, if this occurred today, right? Let's say that this was today, and you know, Powell like leaks alpha and says 25 basis points for March, again, before the meeting, before, you know, we've even got to that point. Maybe then the market would have had a lot more energy to poke through. Kind of happier that it's taking a breather, honestly. I think it's a little bit more bullish because, you know, if you have a market that's just ripping like that, chances are you're going to get a lot of late leverage participation, which is good to trade around, but at least for short term, it just creates a choppy environment after the move. So balanced day, kind of normal distribution, a little bit, you know, favoring one side or the other, but it's an attractive looking structure for you to anticipate that a range is going to form. So here is the Dalton setup initially. So zooming in. So Dalton setup is, you know, you have a 80%, and this is old school Dalton, right? James Dalton. If you open up outside of value, and this, you know, in crypto 24-hour market, if you close outside of value, so here's value. So close outside of fair value, you know, if you close outside of fair value, you're opening up outside of it the next day, right? There's no like overnight gap or anything like that, you know, between cash sessions or, you know, regular trading hours. So obviously opened up out here. The criteria for a Dalton setup is 2 TPO columns inside. So 1, 2. So basically over a half hour's worth of exposure to the prior value area. So, you know, some people will wait for an hourly close, right? For 2 of these to close in there. Some people might wait for the, you know, the first half hour rotation to close inside of there as a trigger. There's no like, I don't think there's a, it depends on the environment, right? This might offer an immediate setup, whether or not there's a trap above, whether or not there's a bunch of longs that have come in. This might offer, you know, this might not be an attractive setup if you see absorption take place right here. So I don't think it's necessarily a good idea to just apply like a one size fits all. If we have this amount of closes inside of there, it means it's it's the same setup. There's obviously going to be cases that are stronger versions of Dalton setups than others. Either way, anticipating that after a strong trend day, that you're going to have multiple periods of balance, I think it's right to assume that the lows get visited, right? So if you do have that setup occurring, there's a high probability it's going to lead to follow through. That usually would involve, right, the stop placed above the retest, right? So if you have the first attempt to gain acceptance outside of value, so here is value, here's your 2 rotations inside, here's the high of that. You might place your stop, right outside of this high. You might place it, 1 30-minute ATR, that in that case it would be $360 outside of that. So, your stop would be right up here, and your target is the low of value. So this actually ended up coming back outside. I actually got out of the trade, and then got short again, even higher. The reason I got short higher when it was already outside of value is because I was anticipating this just to balance out over time either way. So honestly, this was the technical setup down here, right? But as soon as we started to rotate up and we saw volume come in over here, and it didn't look like we were just going to squeeze all the way through, right? I was anticipating to begin with that this was going to form a sort of 2 to 3 day bounce. I just reestablished the position and placed my my invalidation above the highs. I think at that point it was just a safe location to expect a range to occur either way. So this was this morning. So close that out right down here, tweeted about it in real time. And then this setup was a little bit different. It was a little bit more nuanced. So we're looking at, so right before the stream or during the stream, my car guy did call me and he's like, I don't know, here's the production number for your car. I don't know if you could change the color on it. I'm thinking, well, you told me when I ordered it back in November, you'd have the production number for me well before now. And now suddenly when I want to change the color, when I didn't get the production number or anything, you know, you have the production number, it's too late. So we'll see. So anyway, so here's today. So let me put on just a volume profile to get some context. Here is the Dalton setup. Here is the move that I longed after closing out that position. So this is kind of a running diagonal that we had been putting in. Decently respected over time. All right, price breaks down through that level. You have your Dalton setup. This is the area where a lot of people might anticipate that we're going to break down, right? So we run something that's, I don't really focus too much on diagonals, but we run what looks like to be a pretty obvious diagonal. Let me draw that with a TradingView native drawing tool. We won that. We run what looks like a pretty obvious diagonal. Into this low, we have a bunch of new shorts that come into the market. So I'm thinking about this as, I don't think that, I anticipate that this trend day is going to result in balance. So what that implies is price being rotational, right? The highs being sold, the lows being bought, and us moving sideways a little bit longer than maybe some anticipate. So for some, it means anticipating we're going to get a breakout sooner. And then for the other side of the market, it anticipates we're going to get a breakdown sooner, when really we're just into the second day after our first day of balance. So really just looking for another trap to develop instead of at the highs, at the lows. And I think that this was just a little bit more attractive because we had this clean diagonal at this point that I could almost imagine, you know, a bunch of people drawing, putting on the chart and saying, oh, look, we're breaking down, right? So this is not on its own a trade that I would just take just because of that, but we actually had a significant amount of selling that came into the market down there. So for example, I'll just switch this up real quick. Oh, I labeled both of my buttons top left. What a dummy. So we're looking at, this is the low right here. All right. So you have sellers driving into the low. There's a good enough amount of volume down here, and this is Bybit USDT perps, which are about 5 or 6 to 1 the volume of the. Sorry, I got an itchy nose now. 5. So I'm an old dude, so I need to like cut my nose hairs every once in a while. Spilling the alpha, what you should do when you're older. So we have about 5 or 6 to 1 trading volumes now for USDT margin perps versus BTC margin. I think there's chances that flips when the trend becomes really obvious. If we break above like 46, you might have a bunch of people that are trading, you know, coin margin perps because they want to have that underlying exposure while they're trading futures as well. At the lows of last May to July, we saw USDT margin perps favored again. That does make for explosive moves upwards because for anyone who is hedged in USDT margin perps, they have to buy back their hedge and then buy to get exposure again. So there was a large amount of selling that came in down here. And actually, if we, I think I could pull it up. Where is it? I have let me just set up my other screen. So on Binance as well. So you could actually look at BitMEX also because it's the same activity. On Binance as well, we saw a pretty decent uptick in open interest and aggressive selling into that pocket. And again, just kind of an area that I would anticipate like a false break to occur, right? So I immediately got behind that position. I didn't anticipate it to have as much overthrow. So one sec. Getting a little lost in my screens because I just covered my Streamlabs. So let me go back to main. So I said we were playing back towards the highs. I thought, I ended up taking profit at around 44.5. So I didn't think that we were necessarily going to come up to, 45.2 or as far as we did. I thought we were going to do something along the lines of, take out these highs, gas out, and then possibly, move sideways a little bit sooner rather than poking up as much as we did. But that ended up offering a very, I would say this was a very easy short for anyone who was willing to step in the way of it. So what actually happened right here? This is just a 1 minute candle, but what actually happened up here was, if you're looking at the tape, and you could look at this on, we could look at this on multiple exchanges as well. So we're looking at right here, Binance. This is lined up, right? Just making sure that I made the screen on my Streamlabs a little different so that it could fit just the margins of the windows a little bit better than sometimes it does. So a hell of a lot of long activity on Binance. One sec. So I forget what the actual increase was. So there were a lot of longs that were already built up, but it was somewhere along the lines of, I don't know, 600 to 1,000 BTC into that pocket. Sorry guys, I'm getting lost when I have a vertical screen. Oh, you could kind of see it, right? So if I put something on, can you guys see that corner screen? You could probably just see the edge of it, of my vertical monitor. So just a lot of long activity that had come in. I mean, if I put on Bybit again, you can see sort of the same, I didn't label my buttons properly. You can see sort of the same amount of activity. So you have a bunch of activity coming in towards the highs. I think more importantly, it wasn't, I'm looking at Binance, I'm looking at this. I had posted though, prior to this happening, what I think is going to happen either way is that price is going to attempt to trend once more, and then we'll have a more decent snapback. So when this was actually moving up on the low time frames, the tape price was staying pretty, I was going to say staying erect. Price was staying towards the high. The tape was ripping, but there was no longer any progress. You had all that volume come in, and all I did was I essentially just got short at the first 2 minutes, 2 minute red bars, right? So right here. So we're looking at, I think it got short just above, it was probably more along the lines of like 45,100. Anticipating that we're going to continue to range. This is very unlikely going to be a breakout in progress. Really just a short squeeze. And again, the market reaching towards the highs. Tape speed was there, but there was no longer any progress. And then looking at a structure like this, just kind of poorly built on the low time frames. Locally, some obvious lows. Once something like this begins to unwind and you have that amount of volume that comes in above, it's very unlikely that your breakout buyers that have bought 50 million plus in BTC, and even the passive, at this point it doesn't have to be just your aggressive buyers. There were willing passive buyers up here as well. So on Bybit, there was someone who was willing to step in front of, I think it was like 10 million contracts worth of BTC up at these highs passively, right? Whether that's, a market maker or just a passive idiot. Either way, they're willing to absorb that activity up here. So there's a lot of risk tagged on up there. As soon as you start to rotate lower, just in the context of this being what's likely to be a further balance established. And what I think is, I don't think we're breaking 45 right yet. I think that it's more likely, honestly, that we do something along the lines of, oh, fuck, I never changed the screen. I was looking at the 1 minute chart on, I was looking at this, so just to go over this real quick. I was looking at this when I was saying 2 minutes. Just the idea that this is going to probably balance out a little bit longer. Let me look at the chat. So Barry tweets in the middle of the bull market. Barry's tweets were actually timed pretty well, but everything worked then. So when Barry said that he was buying more BTC, you know he already bought it a while ago, right? So one sec, let me just put on profile just so I have it on this. Right now, by the way, I am trading alts. So I built a position on one. Solana, AVAX, and Luna obviously are very strong. Where is this? I gotta turn the music down a little bit. Come on, pop up. There we go. Make the ticks a little bit smaller. So yeah, the idea anyway with this short, I was more confident in stepping the way up there either way, just because I think that we do test. I think we do test these lows. One sec. You guys notice I like talk ahead of catching up to what I'm trying to set up quite often. Here we go. I think there is a pretty high probability that we test like 42.7. Put it that way. And now that you've taken this high, just as a reminder, this high being taken, this low is still intact. If we do get something like this, and let's say we're here, right? I've said this a ton of times. If you take the high, grab liquidity at the high, grab liquidity at the low, and then you favor a side after that, just consider that these two areas have been cleaned up. I would not step in front of the next side to be revisited again. So if we're just at, to be as neutral as possible, if we are just at 44,000 and we rotate back down towards 42.7, or if we are at 44,000 and we rotate back up towards 45, I think it's just highly likely at that point that you should respect the move. And not for nothing, let's say that occurs. What is this left with? I mean, maybe that's a 2-day balance. This is so far it almost was an inside day setup. So far you have a 2-day balance. If you probe the low today, or let's say tomorrow we balance out and do that. So if we're left with something like this, a little bit more of a tail down there. This is a really nice composite. A break from balance, you never want to fade it in the first leg. So what that means is, let's say your value area is something like this, value area high, value area low. First move out, you don't want to fade the first leg. Give me one sec, guys. I have to actually blow my nose. Where is the break screen? I'm just wearing pajamas right now. I don't need you guys to see me in my Lulus. All right, we're back. Okay, where were we? Okay, Adam, yeah. I've been trading alts, futures. I've been trading alt futures. just because right now they're a little bit more liquid. They usually are actually more liquid, but the setups I've been looking at are yeah, I'm taking them with futures, not with spot. I'm not just starting to build them right now, but I'm starting to focus more on building them. I always tag on a position to begin with, so just a small position just to anchor myself to it. But I think there's a lot of potentially attractive setups across the board, in which case I'll usually tag something on just so I focus on it a bit more. Not obviously without reason, but I'll just go over them real quick. Just to clarify, this trading is all very short term with alts, right? So for the last 2 months, I've been talking about trading alts a lot more. It is me trading alts very similarly to how I trade BTC. If I'm going to be swinging, so just I guess this is really important to say forward, because otherwise I'll start talking about trading and I'll, I guess, have you guys thinking that I'm talking about preparing for the next bull market. If I'm going to be building a position, it's going to be with spot. Building like a serious position. I could build a position with a futures as a futures product as well. I'm getting tongue tied, but that really just means I'm anchoring something on, and then I'm looking for the pullback to add the remaining position. As far as how I choose alts, I need to see that it's outperforming BTC, or at least holding up as well as or better than BTC. So Solana doing decently. Luna obviously incredibly strong recently. AVAX was looking good until today. Atom, I actually shorted Atom from actually I almost caught the Pico top just around 3280. But Atom is looking, again, taking both sides, just trading alts the same way that I trade BTC now. But I think Atom is doing the same thing that Solana is potentially doing, that AVAX is potentially doing, where if BTC does break 45, we're going to see some much bigger moves from these. FTM, near, what else? There was another one. I'm going to go over these charts individually in a second, but just want to make sure I have. Oh, FTT. All right, so let's just go through these charts individually, because otherwise I'll just get myself tied up. And then I'll go over the questions in a sec. One that caught my eye today, kind of fell out of favor again, is FTT, right? So just look at this on the weekly right now. So weekly, you have the third attempt towards this high of around, this region of around 46.5, right? It's not exactly, I say region and just the number so that you guys can anchor yourself around somewhere, but it's not just 46.5, right? It's just the first level. I have the level on there, but it was the first level I just saw when my mouse was hovered. This supply zone, right? So first return back to there again, not first return, third, what the fuck am I saying? Third week, moving up towards that level. Just a very defined level at this point. So this is prior support region, broke down here, acted as resistance again, resistance. Just look at how many times you've had to go at this area. So I think needless to say, a clean break above, let's call it 48 for all intents and purposes. So a clean break above 48 to 50. And I think it's very likely that this begins a much larger move up, right? Where ultimately your initial target are going to be these highs, right around 55. But chances are, since this is built this way, a series of lower highs, anything that probes that moves very quickly. And you have one of those cases where you don't have much of anything from a structural standpoint standing in the way before you get up to 64. So that's an if thing, right? That's if that happens. So it's a very nice bottom that potential bottom that's forming, a very obvious level. The thing about the very obvious level is the chances are when this breaks, it might not offer a a very nice technical sort of textbook pullback, but instead you get something that moves very quickly through this region. I think a candle that is maybe a candle that's 1.5, 2.5, the normal daily candle, right? So ATR, something like this is probably the green light, right? And the point of me saying that was because something like this makes you think, oh, we have to get a pullback. Chances are that this, though, continues much further before you get any kind of pullback, right? So a strong impulsive move. I don't know why I was focusing on the ATR of it, but it's a good way of considering whether or not something is worth paying attention to when you have an idea of what the norms are. I have like a runny nose all of a sudden, so sorry, apologies. Okay. AVAX. So AVAX and a lot of other alts have this very similar local SR flip taking place. This I think is cleanly defined. This was not a very substantial structure by any means for us to fade here. But again, you are seeing correlation between BTC, and it's just a matter of timing. When this is moving up, if BTC is moving down, if this is very correlated, you're probably just going to see it follow BTC. But still, it offers a decent risk reward from this level, right? So 80, being invalidation in that region, and a target of ultimately 95, at least in the short term. Solana. This one's a little bit more defined because you have this structure flipped right here between like 92 and 96, just a general region, right? It had been acting as resistance. We go out onto the daily. These lows, turn resistance, fail to break down, higher low. You're looking for just a microstructural higher low right here. You had a brief pullback. And right now you have a breakout of this, meme line diagonal resistance. And you could draw this really a bunch of places, so I don't like to focus too much on these. But again, the idea is that you might have a lot of people looking at this level. When you have a clean break through it, chances are that if you break above this 104 region now, so we broke above here to next resistance, break above 104, 105, and you're just looking at the 120 region. All right. Near FTM, all in basically the same. Oh, one as well. One is not. So what I said this morning was one looked like it was in a similar situation as FTM, right? Very obvious level. Looking at this to expand through. It could just be that this is weaker, right? Didn't catch a bid fast enough at the wrong time. I don't think it's necessarily the case. I think it's just lagging. But that is a risk, right? That it's just the weaker one, and we're seeing a little bit of rotation right now, and this might not really have any legs to it. For near, I would honestly like to see a pullback down to this high nines, $10 region. I think chances are you get that too. So something that develops down here, and I think at that point, this low is a deviation. And then you're looking up at that 13, the highs around that 13 region as a next target. I mean, this is all very obviously contingent on, very much contingent on BTC. But you're starting to see really good signs. I mean, the market has been that, excuse me guys, I should just turn my camera off for the amount of times I'm like rubbing my nose. I'm a human being though, you guys do it too. Some of you guys might even pick your nose and eat it. But what we're looking at across the board is like just a sustained downtrend now for a lot of pairs. It's been going on for months. And I like to take weekly reclaims. When with alts, the thing that I need to see is some kind of weekly reclaim. Otherwise, I really don't have an interest in alts. The alts that I'm trading similarly to how I trade BTC, whether I'm looking at flow and volume, that's lower time frame anyway, and a lot of that's based on the amount of participation that's in those pairs, the amount of momentum in those pairs. It's not going to make a big difference. Seeing charts like, for example, DYDX. These are potentially longer term swings that are building up for sure though, right? Because a weekly reclaim is the first sign, I think, of strength that's worth paying attention to. The thing is, you could have multiple weekly reclaims that lead to nothing, but we're in a position now where across the board for a lot of alts, we've had a lot of congestion now, multiple attempts at breaking down much lower. Yes, this was a considerable drop even within this region, but you're looking at really the third drive on the weekly, and possibly a reclaim again. I think you have to imagine at some point there's going to be a much larger or much greater amount of mean reversion. But just as a reminder, if you look at prior weekly reclaims, so just the idea of retaking this low and retaking this low, I'll box this out. Actually, I'll draw that out. So here was the first attempt. Here is a more recent attempt. So let's look at what went on there. Whoops. Okay, so this was a prior weekly level, right? Price looked like it was finding support and instead just rolled over. This was after the first major breakdown though, so not necessarily the most attractive time to look for it regardless, when everything was just nuking. This one was stronger right here. So you had a breakup, retest immediately right here. This was a good setup to take. So reclaim of weekly structure after this period of consolidation. Let me just zoom in and show you this trigger. So price breaks up, retests as support, and then has a micro pullback right here. And this is looking at, you could look at an hourly chart or a 30-minute chart, but respects the prior break, right? So respects the prior break. Ultimately, you're just looking at playing the next high time frame level. So where we are right now, and again, price came back down to this level after breaking down, and the level again acted like support, right? So just this is what I would describe as a high probability setup, right? When you have a weekly level and you return back to it after a long period of time. So that case was 3 weeks, 4 weeks. So here is again our third attempt at doing that. So this is so far it looks like it's acting like support, right? So your target would be, if this is going to maintain this 575 level, your target would be right around 671. I think chances of this happening now are probably greater because we've had multiple goes at this. So if you look at this structure as a whole, you're just channeling down. And I'm not trying to draw this precisely whatsoever. I'm just trying to, I guess, shape the structure to make it a little bit more obvious. Multiple attempts at the lows. Bounces are getting, a pretty decent bounce right here. I would expect this to at least base out a little bit longer. We're not talking about a V-shaped reversal, but it is showing, I think, that the tide or the momentum is beginning to shift. If you put on an RSI right now, I bet this has an RSI divergence. So I'll put on an RSI real quick. So lower lows. It's actually, I don't know if that's, I'm not an RSI guy, but it looked like there was a divergence setting up back here before this broke down. I have this other indicator open that's confidential. So not confidential. It's from a friend of mine who makes them, from the Rebirth DAO. And it actually doesn't look like, I guess, a really obvious RSI divergence. The idea, I think it just looks like momentum is beginning to dry up towards the downside either way, or was drying up. But I think you get the point. Either way, the weekly level is the area that we would want to see the transition occur. So just this level flipping. So a daily close above that level, you know, a retest of that level and that maintaining as support. Either of those begin to shift at least the focus and possibly the momentum towards the upside. This might not, I think I was thinking that this was a stronger looking pair, but DYDX looks like it still has looks like it just has supply coming in. Like this move off of the low is not that attractive. What pair did I think I was looking at on the weekly that I wanted to use as an example? It'll be a waste of time trying to look for it right now. The point being is with alts, you at least need to see some kind of weekly reclaim. Unless you're Luna and you just look strong through and through. Guys, you have any questions? Sorry. I was trying to remember what the chart was. Farhan, everything outside of the EXO update? What are you talking about? Most accurate swing setup? I don't know how to describe what my most accurate swing setup is. I don't think there's any like cookie cutter. I would say most accurate swing setup is like a swing failure on the daily or the weekly after price has spent a really long amount of time above the swing high or swing low. So high time frame swing failure. This is a good one right here. So this is from October to November, and that's just a straight move up to the high. These are attractive because, I mean, it seems like the least attractive trade to take because it looks like it's about to just continue up, but they're very easily defined once you see volume come in above this level. I don't think it would. You could call it a swing setup if you consider that when the breakdown occurs that you're likely revisiting the lows of any kind of range before that. But I don't know how I would describe my most accurate swing setup. I mean, a lot of it depends on circumstance. I mean, how much volume has come into the level. Because you could have a technical setup that's not as attractive based on the underlying order flow. No, the course on profile and order flow is not. It's your basic groundwork that you need to know to begin to use both of them. I don't have any advanced courses on news or anything like that. There's plenty of free stuff that's available on YouTube that I would suggest, and InSilico shares a lot of free material as well. I don't have time to do complete courses like that, or I don't have the interest right now to do that. Maybe in the future. After 40, yeah, close enough. Oh, so Michael, I think I got away from answering your question before, which I have a habit of doing. So my approach with building alts, so you don't really ever know if BTC will drop a little, right? You just can assume that maybe there's a chance that it'll drop more in certain situations. But with alts, I just trade them very technically. Um, so if we're having SR flips setting up, and they have been alts that have been in favor and have had strong flow in the past, I'm just going to be focusing on them, and then trying to get involved as tight as possible to an area that I can define risk around. There's really not a whole lot to it. That's for just the swing setups, right? Order flow setups are a little bit more nuanced, and again, it's very similar to how I trade BTC, but without a footprint. Yeah, if so, Jazzveer, I think I said this earlier. I said that if we broke up from here, and this goes back to, I've said this a handful of times, what you want to see, and I said this back here. Where else did I say it? Back here, just trying to think of the times where I was basically giving financial advice on Twitter, saying if this breaks up, like you're not getting a pullback, with where I was adamant. So what I just said recently was, if this breaks, like if this consolidates here, and then we break up to 46, and then price comes back down and retests this, 44 region, maybe it does offer a messy retest where you have something like that, breaks up, messy retest, but then we reclaim it. All right, so you could get behind that. But I think a bullish move is much more likely to be involved, is much more likely to occur where, let's say you consolidate here and then you poke up and then you're at 46, right? And there's a higher probability of this not retesting if this is really bullish, and instead just taking off. And the first consolidation happens around mid-range, and then you have to wonder if you're going to get the retest or if this is going to lead to here. And then by the time it comes back down here, a month and a half has already passed, and then you're not quite sure if this is going to be just a lower high, right? And that we're coming back down. So a lot of the times if I'm really confident in a level, if I'm not already involved, I just bite the bullet and I buy high, right? So if we nuke up to 46, I just buy. Not obviously on its own, just looking at the chart like this. I'm going to be looking at the order flow, but once the order flow looks supportive of the move, once you see like the first bit of selling come in and price not walk back lower, that's usually it. Yeah, Trading Ride's a great resource for order flow stuff. Adam was actually a member of Blockroots for a while, so. Yeah, so Gregory's, yeah, I do have profiles for, I don't know if I ever call them profiles, but just ways that I consider them. So I think that Bybit is usually where you'll see like the latest terrible positioning. Although this happens on Binance as well, but Bybit, you don't usually see that they're correct about a move, like from the beginning. They're usually putting in the highs and the lows on the low time frames and the high time frames by being late. Bybit offers, I think, really good look at dumb order flow. Bybit offers really good CVD divergences. BitMEX is more in line. BitMEX is clean flow. I think it's smarter flow. I think, therefore, when there are BitMEX divergences on BitMEX and for the same reason on Binance, you don't get them as often, like CVD divergences, but when they are, I think they're really telling. So BitMEX and Binance are close in line, and I pay attention to FTX as well. So I guess I think I trust FTX order flow the least because of Alameda and their involvement with FTX. I think that you don't have to worry too much about breaking everything down, though. Like I always said, I have the other exchanges within iSight, um, I have, normally I'll have Binance and FTX just pulled up. I'll have a chart with their open interest and either a CVD or their long short delta. And I'm looking at the Bybit footprint. Now, there will be differences, right? Maybe some setups that I'm missing out on Binance. I haven't found a reason to look at a Binance footprint or an FTX footprint. The exchanges are, for the most part, are going to be kept in line. So I don't think that there's anything that's going to... There's nuanced cases from each exchange, but I don't think it would be a good idea for me to start trying to look under the hood on all of them when I, do a really good job of picking up on the good ones to begin with, the way I have my system set up. So Matthew Everest, more courses. I don't know. I've seen some other courses. There's like an Axia course. There's I think Dalton has a long course. What I find with courses is, one, you're learning how the person trades who creates the course. All the beginning material that you have to learn is all the same, and you could get it all for free. So you're not gonna like learn any magic tricks by or like special trading setups with regard to BTC by watching other courses, because the other courses are all developed. Like the really long, in-depth courses for profile and like footprint, I feel like they're really drawn out. They spend a lot of time creating 2-hour long videos about the footprint, specific setups for like the ES or crude oil or the NASDAQ. And I think they do that to justify like a $5,000 price tag. But I don't feel like I've ever seen someone else's material and thought, wow, I really learned something tremendously different that you wouldn't have already learned by just literally learning the foundation and paying attention to the tape on your own. And I have tried, when we were creating Blockroots course, I didn't know how to create a course, right? So I did, watch a little bit of how Axia presents their information. I think, I had the old Dalton stuff, period. I've created a folder over my career of trading of just anything. I'm constantly trying to learn new things. And what I've always found is every time I try to go learn something new, I realize that all the same information is out there. It's just how it's applied. Anything that's nuanced is not going to be in a video, really. It probably isn't going to last for long either. So all the stuff about like profiles, when you get into depth, you realize a lot of that stuff is old anyway. Like things about day types, not really necessary. A lot of the original profile was under the concept, built under the idea that the presence and implied volume, and now we know that, a volume profile and a TPO profile, there can be, differences between how they look, obviously from exchange to exchange. So I mean, there's plenty of courses out there. I can't say that you're gonna learn anything really groundbreaking. They're all really expensive. So when we created ours, we never even advertise it, honestly. When we created ours, it was like, well, we put this together. I definitely don't want to be the type of people that charge like hundreds of dollars for something that's available for free. So we're charging $50 because it's like you're paying me to curate it for you. That's all it really is. Like if you do enough homework, you can find out how to get all these courses for free. You can watch basically enough stuff that make them obsolete anyway. And it is what it is, right? By paying for a course, you're paying for someone else to package it together for you because, ultimately we're all a little bit lazy. Hedge funds do really... So hedge funds are not like... Market makers are coming to market making crypto. There are hedge funds that have been here for a long time. It doesn't necessarily mean that they're market makers. Those aren't interchangeable in the finance world. But Citadel specifically coming to the market and market making. Just market makers are distorting lower time frame price action. They're making things, BTC trade more like the ES. They're keeping it in line more with the ES. So I don't think that it's going to make it. I think over time you're going to see that Bitcoin is tougher. Maybe it's tougher to trade, but at the same time, I used to trade the ES. I used to trade crude oil, um, and the setups are more like crypto setups are like caricatures of legacy setups. Sorry, I have a phone call. They're more extreme, right? But I don't think it's gonna. I think if you find that you're gonna have to constantly look for new edging markets anyway, it's gonna distort lower time frame price action. It's not gonna make it impossible to trade. The benefit of crypto is it trends hard when it trends. Let's see. I don't have thoughts on Ichimoku Cloud. It was like a popular tool in 2016, 17, even 18. Everything will work. You could build a system. I'll just leave you with, you could build a system. You know, I get people asking, hey, what about this specific indicator? You could build a system around almost any indicator, believe it or not, in crypto. Ichimoku is very good when the market is trending. You really have to understand what kind of environment you're in, though. Are you in a trending environment or a bracketed, range-bound environment? So, like, you know, you have traders that they really, in ranging environments, they use things like, and I've used these from time to time too. What are they? What's it called? What's the name? I'm just like having a brain fart for a second. The Keltner channel. Keltner channel, I use things like standard deviation bands, ATR bands. Keltner channel and ATR bands basically the same thing. So I know you guys have seen me use those before. VWAP standard deviation bands. These are good for range-bound, choppy environments. Moving averages are good for trending environments. Ichimoku Cloud better for trending environments. Oscillators better for ranging environments. Also useful in trending environments though, but you have to understand what kind of reading you should expect when the market is trending when you're looking at an oscillator, something like the RSI or the stock RSI. Everything can be used to build a profitable system though, trust me. So relative to check up on OI or relative volume for alts without opening each chart. You mean just to list them all? Coinalyze? So for example, futures data. Here's your link. Here's your 24-hour change, 24-hour change in volume, open interest total, open interest change in 24 hours, open interest share. So yeah. That's Coinalyze. What's going on with Bitcoin? I haven't been paying attention. So let's see. I think we're going to come down and test. I think we're going to test right around 42.8. 42. Yeah, 42.8. We'll see. I think that if it consolidates under this level, though, I have a hard time thinking that it's just going to turn from here after what we've seen. So swing failure. So yeah, I add a little bit more. I like to look for a little bit more confluence behind an alt swing failure by looking at a little bit of the underlying order flow. So looking at open interest, paying attention to market depth. These are not things that are like very advanced at all, but I'm starting to trade alts, like I said, more like BTC. They're very technical. They're not as distorted yet. They are more retail driven. So I'm looking at things like you would find right here. Same things that I look at with BTC when I'm swinging. So open interest and CVD. I have my opinions on the heat map. When you have confluence, that's great though, right? But I think this is like the cherry on top versus like you don't want to say, oh, if we're looking at, let's go to, so I have my list right here, FTM on Binance. And, for example, I don't want to rely on anything that's just showing up in the heat map that I already don't have a sort of a feel for. but I'm starting to focus more on just lower time frame open interest, changes in open interest and delta for alts. I guess that's the best way to put it. So if you have a swing failure in alts and you see that, with that swing failure into the level, you had a substantial ramp up in open interest, that makes it obviously a more attractive setup than if you didn't, because there's a potential for a lot more positions to unwind when that situation begins to unfold. When that unwinds and unfolds and undoes and all that shit. I think the most reliable swing failure patterns are high time frame ones, right? So, and just to draw a crude representation, but an exaggerated representation, weekly level or a daily level, long period of time above it, return from it over a long period of time, straight down, right? Not much, the difference between this versus coming down slowly over time means a lot, right? If you it doesn't mean that you can't have done this and then vertically drop and then it's not good any longer because you've consolidated on the way there. The idea is, pretty one-sided move into the level, spent a lot of time in between. And the same thing works for a move at the high. Those are very reliable because, weekly levels, daily levels, they are major contextual levels, major pain points, major inflection points, areas where the market is. If we're looking at the weekly chart, there's nothing really beyond that. You could look at a date, you could look at a monthly, a quarterly, a yearly, but this is market structure as high time frame as most people go. How people are defining this on a major level. So breaking levels on the weekly chart, pivots specifically, brings a lot of money and a lot of change into the market, right? Whether it's involuntarily or voluntary, whether it stops being run or people shorting a potential breakdown, these are areas where there's a lot of participation. So for this reason, this swing failure was very good. Whereas the all-time high shift from back here, the reclaim was different. All right. This couple months after a 12-month plus move, this years of space in between, you're not expecting this to just be a swing failure. Break of an all-time high gets everyone in the market. This was all-time high, another all-time high, potential for swing failure. When price rises and open interest falls, that's short side getting heavy and longs closing? Not necessarily. No, that's usually the opposite. When price rises and open interest falls, you can have contracts closing out for both sides, right? You could have, if it's very obvious that price is rising up, tick for tick with open interest dropping, it's a good case for shorts covering, right? Shorts buying back, price moving up. Usually you see that occur at bottoms, right? So for example, this is a good example right here. You have a swing failure. So this is just a 1 minute chart, right? So this is really tight. So potential scalp opportunity. You have confluence of some kind of, passive order, passive buyer. It's nothing that's majorly significant. You're looking at, that's 192,000 contracts. Not contracts, excuse me, that's 192,000 contracts. But the idea is take out a low, have some confluence of a passive buyer down there, and in the move down, you have open interest rising over time. So there's a chance for, again, this to just be a low time frame scalp opportunity at the break of this low. So if you're looking at this on the low time frames and you see that, is there a drawing tool on this? Yeah, it's right here. You see a potential setup forming when price is beginning to get bid up after dropping below that low. And into this low, you know, we've had sellers come in. And again, on the way down, you're seeing that new positioning is coming into the market. Delta down, CVD up, right? Overall delta down, CVD up. Just some, it's possible and probable that people are shorting for some type of breakdown. If you look at this on a low time frame, we'll put on our profile. Auto tick is usually too big. One sec. Whoa. Let's see if that. Oh, whoa, it's an ugly profile. Hold on one sec. Is that so? There we go. Okay, so here's a trending day. So let's look at this setup again. Trending day, break from prior balance. We just paint a little bit of a higher time frame picture first. Sorry, the Spaceman tool is great. It's just fucks with the scaling, right? So that's the Pico low. But we're looking at this daily low right here. Go back out, so you have a clean break above. You had that balance consolidation day. Let's do that again. We'll get this at some point. We gotta make the ticks, what do I have to do? Make those ticks finer or bigger? Let's see. Let's try bigger. I'll just compress it. There we go. So consolidation under resistance, poke up. So first scalp opportunity, break into this low volume region. Right? If we look at a VWAP, there's your VWAP. Open interest increasing into that low. Right? I'm sure people are shorting what is the breakdown after taking over that daily level. It's the same kind of idea behind taking trades in BTC. Now this is not necessarily the most beautiful example. This is 100 basis points out of that. So with an alt, like it better be thick to get behind a position that's this small. But the idea is still there. Now this, if this is beginning to trend strongly, we would see the same sort of thing you would expect from BTC. So trend day, VWAP is right here. Maybe go on to balance out over the next 2 days, right? Maybe next day and a half. But obviously this depends largely in part on BTC as well. Good sign is excuse me, if FTM is trading against BTC, if it is leading BTC, or if it is strong against BTC. And you know, looking at the last couple hours, you can see that it's not necessarily the case, although the last day it is. I'm gonna wrap it up in a sec, guys. AVAX retest looking good. Someone says that. I thought I added this. It is added, there we go. So we look at AVAX right now. You have a SR flip. So what I think happens a lot with alts, I think it's happening right now, you have some clean moves by them and signs of strength showing up, retaking levels, and it looks like they're breaking down from their consolidations. What I anticipate is that this larger level is more important than anything that takes place up here, or I think it should be, obviously. So for example, same sort of situation. You have a lot more activity coming into the market overall, but there's a potential for sellers to get, you know, that possibly getting caught in this pocket. And really what you're looking at is a pullback to a pretty obvious level. The thing about it, like I said though, is, and again, these are correlated to BTC right now. Like AVAX is not outperforming BTC. So these are back at their level. You know, really bullish would have gotten away already, but it doesn't mean that this is not a good buying opportunity. I think this is a good, good time to focus on rotation sizes. So for example, like what's the average rotation size as price moves up, pulls back, moves up, pulls back? Like what kind of pullbacks can we expect? I think you might see that this is well within reason compared to what we're seeing lower and maybe what we've seen in the past. So it's a good idea to always have an idea, when the market is moving strongly, have an idea of how much you could expect price to pull back even reasonably before continuing. So some people might use like a fib. So for example, so from swing low to swing high, what the hell's going on? Swing low, swing high. Comes back down to the 618. Swing high, swing low to swing high. I mean, this is right around the halfway mark now from the swing high to the swing low. So you got confluence between this support and resistance region. I mean, either way, it's like fibs are, like you could just use this to fit your bias, honestly. Price of gold, yeah, real quick. And then let's wrap it up. So I longed gold and I sold the Pico top, and I'm proud to say that. I didn't sell, maybe it continues up, but I think gold has to do something here during this time. I think it has to. Maybe if things de-escalate, it's fine. But if we still continue to see, Russia having a lot of gold and possibly being someone who is a seller of that gold always changes the equation a little bit. But we're looking at a similar structure to what we put in back in the early, this is going back to 2011, 2012. It looks like this rounded retest of this level, right? Similar structure, right? Consolidation after a strong move up. If this does not honestly break the high, like 2K and above, I don't know. Through all this, if gold couldn't break 2K, I'd be pretty concerned if I was a gold bull. Just very slow to move. I don't think you want gold to break, though, because I think that if gold continues to make new highs, it says that things are getting worse. So, I don't know. I don't focus too much on gold. It just was a good trade for about a week and a half. Or it was more like a month, actually. So I think I got long around 1840 or 1850. So I wasn't like early. Yeah, because it was right here. Anyway, I'm going to wrap it up, guys. I'm done. Hopefully you guys enjoyed this. I'm going to post another call-in link this week or next week. We'll hop on there. Is there anything else I want to go over? Is there anything else that stands out right now? Looks like both sides are closing on FTX. Still have there's a lot of longs in the market for sure. But more specifically on Binance right now, we saw a lot of shorts come into the market after that poke up. And we're talking about, one sec, I'll tell you right now. So give or take 92 million Open interest saw a big jump. Longs are coming back in, but longs were closing out. So I don't know. Maybe they're on the right side of the trade. Not the best area to find a long either way if you're looking at this right now and wondering what you should be doing. I think 45K is... There's only a few times when you get really obvious. And the thing is, a lot of, the assumption is that there's a lot of obvious trades, but there are in hindsight. But there are only a few really obvious trades that I think that you could say with confidence will result in substantial moves or moves that have legs. And I think that the way we are trading right now, 45 is that level. So I think there's a higher probability that we don't fail 45 and then break down. That sounded backwards. I should say I think there's a higher probability that we break above 45 and then continue up than there is that we break through 45 and then break down again. I mean, I'm open to anything because we're below it now, so it's kind of stupid to say because if we never break above it, like I don't have that set up. You could very well see the price continues to range more down here. It wouldn't be out of the question. It wouldn't be bearish. It would just set the range up again. But above 45, I don't think it leads to failure. Put it that way. If we break above 45, I think that we're looking at 52. I think that I don't think there's a high probability that if we break above 45 that we're looking at a fake out. But if it occurs that way and we break above 45 and we see a bunch of longs come in and perps are getting way more aggressive and leading to really not much activity, and we start trading below where that risk is coming in, then that's not good, right? So we'll see. All right, I'm out of here. It's been a good one. It's been a long one. What is going on? Where's my Streamlabs? Okay.